Hi, it's Andy at Location, and as ever, I'm joined by Michael Webb of Mortgage Republic to discuss what's happening in the mortgage world right now. And there's quite a lot to get through today, isn't there, Michael?
Yeah, I think it's going to be a busy episode, Andrew. That's for sure.
Well, I think the question that's on everybody's lips, and certainly the one that we've received most requests for over the last couple of weeks, is what's happening in the mortgage world right now. So without further ado, over to you.
Yeah, so it's a really interesting time. I'm really pleased I'm a mortgage broker, and it's a fun job to do. So the world has gone crazy. Obviously, we've had, for the first time in a very long time, consecutive Bank of England base rate rises for the last few months, and they may continue, they may not, but the trend is definitely upwards. And that trend has set some panic somewhat within the marketplace. That has caused an enormous amount of applications to go in via, obviously, ourselves and other brokers across the UK. And lenders are therefore inundated, is probably the right word, with applications, and unable to manage those applications at a level that they would normally want to service them at, and the speeds they'd want to service them at. So lenders that would typically look at an application within 48 hours, 72 hours, are saying, please don't contact us within the next 17 working days, which is like almost 4 weeks. And there's big delays in applications. So there kind of needs to be a reset in people's expectations of how quickly things are going to happen. There's no way in most cases to expedite this, because everything is urgent, and I'm afraid that you'll just have to wait. And that is the message coming out of lenders. I mean, so even when we do...
Let's just tackle that point, Michael, if we can. If the application process is, you know, to a certain degree, you're in the lap of the gods, you are with the lenders, it's their timeframes. What can our audience, what can our clients, our potential buyers be doing in the background to ensure that you're fully equipped to at least get the application in
this is really important. So you want to be, because of these delays, you want to be having a fully compliantly packaged mortgage application on day one, really. So you want to have everything that lender could and is likely to ask for submitted to that lender when the application is submitted, so that when it is finally looked at, they're not coming back with more questions that you then need to answer, and the application goes back into a queue and might be another week, 10 days before it's looked at again. And then you're kind of 6, 7, 8 weeks before you're getting a mortgage offer. So what you want is, when your application gets to that underwriter's queue and they're working on it, that they're able to tick off all the bits they want and move swiftly to a mortgage offer for you. So yeah, you need to be working with a broker that's got an understanding of what that lender's going to be asking for, is answering questions up front before they're even asked. That's very important. Putting memos to the lenders, assessing bank statements, explaining what things are on bank statements. You want everything answered before it's even asked by an underwriter, so that they've got all of that information and they can tick off the application and move forward. And lenders are going to appreciate that as well, and that's also going to help speed things up over time. Now, so I don't see this
the surge, Michael. What's causing the surge? Are we looking at new? I mean, from an estate agency perspective, we're still fully booking property launches with anywhere between 8 and 15 people on them over sort of 3-4 hour period. I've just launched a beautiful property at £750,000, and we've had 35 inquiries overnight. So we're still seeing an appetite to buy. Is the issue with the lenders being compounded by remortgage business, with people having the foresight to see that rates are on an upward trajectory, and therefore they're looking at refinancing now? Or what's causing, what I'm trying to get at is what's shifted from 3 months ago? Because 3 months ago we were busy, but we weren't having these wait times.
Yeah, so it's an escalation over that 3 months. Obviously, that 3 months has seen base rate rises, which are not in any way correlated with what the lenders have raised the rates by. The lenders have outstripped those base rates significantly with the rises, which has also probably escalated people's urgency to remortgage. So we've had the base rate go up to 1.25. Lenders have put their rates up massively above that. I mean, we had loads of emails even yesterday, which was the 21st of June 2022, saying that lenders are putting the rate up again by 0.4. So this kind of internal panic has caused people to go, I need to review my mortgage earlier. Maybe it's dragging people in whose deals are ending 6 months away, so they're looking at it now, which is bringing people forward. That is very prudent. Even people who are thinking, well, I'm on 3 years into a 5-year fixed. What's that rate? What am I going to be remortgaging at? There's some panic that they'd remortgage at a much, much higher rate. So do they take the hit now and take a 5 or a 10 year now? There's lots of that going on. So there is a surge in remortgage business for sure.
Right.
What's causing the lenders to keep putting the rates up is
that's what I really want to tap into, and just so our audience understand, because like myself, I transact property. I don't understand the intricacies of the financial world like you do, but I'm sure one question that will be on our viewers' lips is, if the Bank of England base rate has gone up 0.25%, and we're already being squeezed as of today, I think it was announced, again, inflation above 9% now, 9.1%. So if the cost of living is rising arguably uncontrollably at the moment with inflation, and the interest rate has already increased 0.25% base point, why are lenders putting up rates by 0.4%? Higher than the Bank of England interest rate?
That's not what they've put it up based on that 0.25. I'd say it's much higher than that. You're probably getting close to 1%. So the reason this has happened is, let's say you've got lender one, and for a 5-year fixed at 75% loan to value, they are the cheapest lender. So they're getting inundated with applications and they can't manage it. So what they do is they need to move themselves from position one down the sourcing list, and they do that by making their interest rate higher. But that then exposes lender two, and they get inundated, so they do it, and then lender three, and then all of a sudden lender one is back at the top. And that can happen, and that's happening really quickly, like within a 24, 48 hour period. And then lender one has to do it again. And then it cycles through, and we're just getting more and more expensive because they're trying to turn the application tap off, basically.
Okay, so I mean, I can foresee one problem here at the moment is, and no disrespect to where we're based, but we are known as being quite laid back in Norfolk. Generally, as a culture, we're not as fast paced as some of the larger cities, shall we say. So the problem I can foresee here is that if lenders are whacking rates up so that they're not as attractive, in the period with which you've had first consultation and given the mortgage advice, they've now found a property with the agent, and you've asked for all of the information and documentation to be able to package that application. If they're waiting 3, 4, 5, 6 days or a week or more, they could be hit with increases that are on a typical mortgage £60-70 a month higher, surely.
Yeah, so we are seeing that. We are, and I don't know how other brokers are working. I would assume very similar to this.
Right.
We are not making a recommendation until we're able to hold all the documents that would allow us to place that case and push submit on that moment. The reason for that is lenders aren't giving notice. So even lenders that have committed in the past saying, look, we will give you 2 or 3 days notice of our rate changes, are emailing us at 3 o'clock in the afternoon and saying we're pulling our rates at 6 o'clock. So there's no notice. And if you're not, as a broker, if you're not holding all that information, and we've already talked about the volume there's capacity issues as well with brokers. So it's like you can't submit, if you've got 6 or 7 cases, you can't submit all of those in a 3-hour period. It's just physically impossible, irrelevant of the admin support and whatever you've got. Because if you've got lots and lots of admin, you'll have lots and lots of brokers. So that 6 and 7 is magnified out to 21, 28, 35.
Cool.
So it's tricky. And we're at the point where we are, look, this is what you can apply for. Now we're applying for it.
Okay, so let's just take a step back there. Two things I'd like to cover off for our audience. One is that the first being, what can applicants do to work with their mortgage broker? And the second would be, what documents are typically required, so that if you are out house hunting at the moment and you are, in your early discussions with an advisor, what do people start needing to get prepared, and how early do they start needing to talk to you?
So let me kind of do that in reverse order. So
Yes.
Really, you should be speaking to a mortgage broker before you view a house. That's my opinion. You need to establish your affordability. Okay. Make sure that the mortgage broker has checked your credit file. Even if you think, oh no, I've got no bad credit, whatever, get your credit file. There's plenty of places you can get it for free. And we recommend a few places where you can see all 3 agencies and things like that. Do that before you view a house. The reason being is you will then get an idea of what the monthly payments are. And that's going to be quite significantly important nowadays, because we're not playing with 1% interest rates. So what you think the monthly payment's going to be might be different to what they actually are. So you need to work out your true affordability. You then need to get your documents together. And to run down a very quick list, if you are employed, you will need proof of ID and proof of address. If you're living at home with your parents, your bank statements can be your proof of address. Proof of ID ideally needs to be driving license, passport. Okay. Have those available. Make sure they're in date. Make sure your driving license is in the correct address. Okay. The other things you want to have are 4 months bank statements. If you're a single individual applying for a mortgage, 4 months bank statements, and that bank account needs to be the account you receive your salary into, 4 months pay slips and your P60. Okay. Generally, that is enough to get things going. Proof of the deposit. So if it's in savings, your savings statement. If it's a gift from your parents, the broker will supply a gift letter that needs to be completed. That is usually lender specific. It's either something the broker will write out and get you to get signed, or the lender will provide a template that needs completing. Right. If you are a couple and you're moving, you'll want to add to that list probably your current mortgage statement, however old it is. So all your mortgage details are held if you own a property. Any joint accounts, especially if you have bill accounts, lenders are going to ask to see the accounts you're paying your bills out of, as well as the accounts that you're getting paid into. If you're self-employed, and self-employed would include people who own limited companies and have shareholdings over 20-25%, you're going to want your latest full SA 100 tax returns. You're also going to want your tax calculations and your tax summary overviews. Your accountants can download these online immediately. There's no need to apply for them. If you have an online tax account, which your accountant will have access to, download them as PDFs, email them to you. If your accountant's saying, oh, we haven't got time, you need to push them and tell them that you're costing me money, dragging your feet. Okay. Also, very possibly, if you're a limited company, they are going to ask for the latest years, possibly latest 2 years, actual limited company accounts. The reason for that is they want to make sure that the dividends you're drawing are from profit that's actually been accrued and not from bounce back loans.
Okay.
So that's quite a vast list, but speak to your mortgage broker and they will give you that list. You should be asked to supply those documents on first appointment.
And I would also argue, Michael, that nobody should be actually inquiring to view a property with an estate agent until they have established that A, the affordability is there, and B, that they are eligible for a mortgage. I would also argue that good estate agents wouldn't allow a viewing until that had been verified.
Difficult. That's a really difficult one because you'll be aware of this, Andrew. You're in a sticky situation in that there's estate agency regulations that say you have to assess the capability of the buyers, both upon offer and throughout the whole process to exchange. They're your TPOS regulations. I can't even remember, 9 and 11 kind of cover those. However, you also can't discriminate, so you have to let them view. But if you're in a situation like you said, you've got a 750 grand property, which in our geography will be an upper level value property, and you've had 35 viewings, requests. The reality is you can only sell it once, so therefore your vendor is probably telling you, well, I don't want 35 people walking around my property. Pick the 10 that are coming to you with the evidence they can afford to pay £750,000.
I've physically got a time slot for up to 16 people on Saturday, and I'm up to 10 now, and I've declined 25 out of the 35 on my vendor's instructions, because he doesn't want people that have got a property to sell or a chain with more than one or two in it viewing the property, because his attitude to the risk is significantly greater for his own transaction. So it's a really fine balancing act, isn't it? So, okay,
that changes if he had 2 people interested. He'd let both of them come around, irrelevant of their chain. But if you've got 35, you can sell it once. So you pick the 10, the 5, the 6, whatever, that are in the position to proceed now. And
absolutely.
Until that switches, we will probably struggle to see some cooling of property prices.
Excellent. Okay, so that's what people can get in advance before they view. Just want to tackle now, what kind of timeline have people got? Because let's just say the market's frenetic at the moment. There's not enough coming on. It can take people 6 weeks to find. So by the time you've got their last 4 months pay slips, they may have had 1 or 2 more.
I mean, they just need to update those for sure.
Okay, and what I want to really get across to our audience here is they go out and view a property on Saturday, they have the offer accepted on Tuesday. When do they need to get those updated documents to you to package and submit the case to avoid potentially ending up having to pay another 0.25, 0.4, 0.5%?
Right. So what they should be doing is let's say we've got documents up to April, because that's when we saw them. They had an offer accepted yesterday. We should have had their updated documents before they submitted their offer in.
So you're saying it's really important to maintain an ongoing relationship with your mortgage broker and update those documents on a monthly basis. So you get your bank statement.
If you're offering, I mean, to the point where most people, it's been ages since I've actually seen a paper pay slip. Most people have electronic pay slips. They're PDFs. They're downloaded from a portal at work, or they're emailed to them by a system. They've got them electronically. It's the case of just uploading them to us, Dropbox, email, however you want to send them securely, and letting us have those. If you're going to offer, you should be speaking to your mortgage broker before you put the offer in and saying, right, what have you got? What do you need? If this offer is accepted, I need you to be able to supply an AIP with the lender we want to go with, and then convert that to an application immediately. So you need to make yourself available and commit some time to providing those documents, making sure you're available to pay any fees on cards. I mean, this is something, I mean, we have a situation where if the rate's being pulled and we have to pay a valuation fee to secure that rate, or an application fee, we need to get hold of that applicant. You must be available. And I understand there's challenges there, but not being available could cost you £60 a month in the morning.
That's really important. And I just want to give our audience a kind of scale of how things shifted. So, Michael, you assisted me with my remortgage back in November last year.
Yes.
Because my rate was changing in March, and you actually told me off because I didn't follow my advice. I should have done it in September, 6 months in advance of the rate changing. And I didn't get around to it till November. And at the time, I think it's anything under 60% loan to value doesn't really affect the interest rate. Would that be correct still?
Yeah, I mean, 60 is usually as low as it goes. So you'll have a 60% offer.
I had a less than 60% loan to value mortgage on a 5-year product with Nationwide at 1.34%. I'm not asking you to quote the Nationwide, but approximately in figurative terms, a mainstream high street lender at the moment, what's the shift?
At least double that.
Crikey.
So I have a client who's completing on a deal tomorrow on a purchase, and they got their offer. Their 6-month offer is almost coming to an end. The purchase was exceptionally complex through conveyancing with some merging of titles and all this nonsense. So they secured their application back in December. They've got a 1.3 something, 5-year fixed, had a fee, £1,500. So I had a look yesterday because they exchanged out of interest of what that individual could have got if they were applying for it today, and it was over double.
Crikey. I mean, that's shocking. That's shocking. Absolutely shocking.
But that in reality, if we look at what the rate's gone up 8%. No, it's gone up from 0.1. 0.01. What? It's gone up from like 0, hasn't it? Really, 0.1 to 1.25. So if you add basically 1.1 to it, plus some margin that the lenders have gathered, that's pretty much what it's gone up by. So yes, when we're talking about rates in the early ones doubling, that's pretty much what just carrying the base rate rises from a 0.1.
And let's just remember, they are a far cry from the 15% in 1989, which my parents suffered.
That's a difficult conversation, though, isn't it? Because yes, I mean, 1989, Andy, you were probably about 25, but I was only 7. So the reality is the cost of housing was much lower. Yeah, but you were still borrowing 3 times your income, and rates were 15%. So as a percentage of your salary, your mortgage payment was broadly what the percentage of your salary would be now. Broadly. Do you know, it's interesting. However, we're about to go over that curve, I think, and that there's lots conspiring on house prices because of that.
Yeah, it's very interesting. There's a statistician within the estate agency world called Christopher Watkins. And he writes analytical data posts for estate agents, ghostwrites them for estate agents. And when he did the exercise in 2020 versus the recession, or just before the recession in 89, mortgages are actually more affordable in 2020 as a percentage ratio of income than they were in the height of 89 and the 90 as we saw the property market going into severe recession, deep recession.
That's what's allowed house prices to run away. Is low interest rates have kept the payments as a percentage of your salary very, very affordable. And like you say, I mean, the data's been checked. It's cheaper in relative terms than having 15% interest rates and back then. So it's but I think that curve is about to be breached.
But it's interesting because his data suggested that it'll either be I think it was Q4 this year or Q1 next, very much depending on what happens with inflation and whether we do hit a recession in terms of a static or reversing of prices within the property market, which will obviously compound it. But the projection is between Q4 this year and Q1 next, as things stand on the 21st of June. But watch this space. Michael, I just want one last question, because I think that's really, really important. We've discussed how busy lenders are and what's happening in the mortgage world right now, which was the initial question. Average time to get a mortgage offer?
That has extended out. I mean, don't get me wrong, you'll still see mortgage brokers putting posts out saying, yeah, you got a mortgage offer in 48 hours. That's because everything was done electronically. The lender was able to electronically identify the individual, check their income electronically via credits to their bank account, and they electronically valued the property. And great, that they still happen, but they're less of a norm. I would say you need to be budgeting for a minimum 6 weeks at the moment. Now, that's not to say that everyone's going to take 6 weeks. Some are going to take double that, and some may only take 2 weeks. But you really shouldn't be expecting an offer within 6 weeks.
Well, that's really interesting, because we refer all of our business to you because we're non-associated companies. We've built up a great relationship over the 18-20 months that we've been open now. Our customers give great positive feedback, and we're grateful to do business with you. And I would suggest that up until this point, 2 or 3 weeks ago, maybe slightly longer, I would say you were averaging 2 to 3 weeks for us. Very quick turnaround, largely because of how you pre-qualify, package the case, and keep the purchaser, on their toes, which is all credit to you because it takes a lot of management. But for the average case, we're now saying that's double that. So folks, do bear in mind, if you need to reach out to myself to understand what's happening within the estate agency element of the property market, please feel free to give us a call on 01842 818688 or email andrew@locationlocation.com. And my good friend Michael, how can people get in touch with you to start asking those questions?
Yeah, so my email's michael@mortgagerepublic.co.uk. Drop me an email, or you can call the office on 01842 816 120.
Perfect. If you guys have found this helpful, please hit the subscribe. Don't forget to get the notification so you see what's happening on the next episode. And we'll keep you updated with what's happening in the very fragile financial and estate agency world at the moment in terms of inflation, interest rates, mortgage affordability, and of course, estate agency and property prices. We really appreciate your time and attention. Thanks for watching.
Thank you very much, Andrew.